Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. Today we're diving into a Form 8K. Now this one isn't your typical deep dive into earnings or big strategic shifts. It's more like a company saying here's a little something for your time, and who doesn't like getting paid. This Form 8K comes from InPoint Commercial Real Estate Income Inc. Think of them as a company that invests in commercial real estate loans. They make money from the interest on these loans, and then they share some of that money with their investors or stockholders. This report dated March 28th, 2025 is all about a distribution, which is just a fancy word for payment to their stockholders. The main point of this report is to announce the upcoming payments. The company's board of directors has decided to give out some money to the people who own shares of their common stock. This money is coming from the company's earnings. Now let's look at who's getting what, because that's what we really want to know, right? There are a few different classes of common stock, each with slightly different arrangements. The important date here is March 31, 2025. If you were a stockholder on that date, you were entitled to a payment. For Class A common stock, the payment is $0 and 10.42 per share. There's no stockholder servicing fee taken out, so you get the full amount. Think of it like getting a dime and a little bit more for each share you own. Class D common stock also gets a gross payment of $0.422 CS per share. But here's a twist, there's a $0.35 stockholder servicing fee. This fee might cover the cost of managing the accounts or providing customer service. So after the fee, Class D stockholders receive $0.107 per share. Class I common stock mirrors Class A. It receives the same $0.10422 distribution with no fees, so they also net $0.142 sell. Gross distribution with no fees, so they also net 0.142. Class P common stock is also straightforward, receiving the full $0.42 sell with no fees deducted. Lastly, Class T common stock also starts with a gross payment of $0.42 per share, but it has a larger stockholder servicing fee of $0.211590. This means Class T stockholders end up with a net distribution of $0.923 per share, so per less than up, with a net distribution of $0.923 per share. So less than a dime, but hey, it's still something. All these payments are expected to be made around April 17, 2025, and they'll be paid in cash. So no funny business, just cold, hard cash. The amount of money you will receive depends on the amount of shares you held on March 31, 2025. Now, what does this all mean? Well, first it shows that InPoint Commercial Real Estate Income is making money and sharing it with its stockholders. This is a positive sign, as it shows the company has spare earnings to share with its investors. It also suggests that the company feels confident about its future prospects, since companies are not keen to pay dividends unless they can continue to do so. However, it's important to remember that these are relatively small payments. For most stockholders, this distribution won't be a life-changing amount of money. What's more important is to consider the bigger picture. How is InPoint performing overall? Are they managing their loans effectively? Are they facing any major risks? This 8K only gives us a tiny piece of the puzzle. Now let's step back and look at the overall picture. InPoint is in the business of commercial real estate loans. This sector can be sensitive to economic conditions. If the economy slows down, businesses might struggle to repay their loans, which could hurt InPoint's bottom line. The different classes of stock are also interesting. The fact that some classes have higher servicing fees suggests that they might be targeted towards different types of investors. Class T, with its higher fees, might be sold through brokers who receive a commission. This isn't necessarily bad, but it's something to be aware of. One notable risk in any real estate investment trust is interest rates. If rates go up, borrowing becomes more expensive and the value of existing loans could decrease. Companies like InPoint have to manage this risk carefully. In conclusion, while this 8K is mostly about a small distribution, it offers a glimpse into the health and strategy of InPoint Commercial Real Estate Income. The payments are a good sign, but investors should always do their homework and consider the broader risks and opportunities facing the company. Thanks for watching. If you found this breakdown helpful, please give us a like, leave a comment, and subscribe for more Corporate Decoder episodes. See you next time.